Hello everyone, a very good morning to all. Welcome to Officers Adda 247 YouTube channel. Let's start today's session with a motivational quote because this is a very important thing to start our morning. Success is not an activity but a process, and this really suits to us. If we say that is success is not the thing that you can achieve in one day, and whatever we achieve in a one day, that actually called coincidence. And that coincidence actually occur in very rare cases, like the chances of that only 1 to 2%. So we have to just follow the process, like we have to just make separate time for our study, and this is the right time when we should just target for our JAIIB examination, for the May to June examination. And this is a time when we should just focus on all the basic things, or and this is a very right time to start. Let's start today's session, and just remember that success is a process, and you will definitely get success if you just follow the right process, right approach. And okay, so let's start. If you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live sessions, and you can get the notifications of the live lectures, as well as the exam related news that related to your examination. So this is a very essential thing, and I think should download the Adda 247 application, as well as subscribe the Officers Adda 247 YouTube channel, so that you can get regular updates. One important update also from our side, that is our target batch is going to start from today, and that batch is very important if you're just wish to clear the examination, like if you just want to clear the upcoming examination of the JIB. And in this batch, the very good thing that you just do not need to worry what you should read or what type of the questions you should just practice. In this batch you will get everything, okay, and this is also very at very convenient price. Like, you only have to just apply the code, that is Y422, and with this code you just avail maximum discount up to 80%, and this is a very right opportunity, and I think you should just enroll in this batch. In this batch I will be your AB faculty, and I will discuss everything in very detailed way, and I will discuss easy questions, and that all level of the questions, easy questions, moderate questions, advanced questions, and whatever the questions I will discuss, and that all just based on the previous year memory based questions. And like the sessions, like the lectures based on just recent examination that held on the 27th February. Okay, so I just include everything in my lecture, so I think you should just enroll in this batch. Okay, so, and our price is also set to rise soon, so this is a very golden chance when you should just grab this opportunity for enrolling in the batches. And this is a very right time, and this is a price rise alert, and with the code that is Y422 you can avail the maximum discount. So do not miss out on this golden opportunity. Okay, so books, on the books, test book and test series, and you can avail the flat 22% discount with the code that is Y422. Okay, so this is the grand preparation of also that is actually running, so you can avail this golden opportunity. So let's start today's session, and today's session is about the capital budgeting. So what we understand by the capital budgeting, and let me fix this. Okay, so what we understand by the capital busting, so we have to understand first. And when we talk about the capital busting, so the first thing that actually understand with the introduction. So the first thing that you have to understand what is capital busting, and I'm just explaining in a very simplest way what is capital busting. So you only have to understand that two words here. First is investment, which is also understand as an expense. Okay, in the accounting term, that investment is actually understand as an expense. And in the second thing, that is investment, and second thing if I say, that is profit. Okay, so now we are just going to understand what is capital budgeting, and this is a very simplest way to understand, and I hope you all just understand in a very simplest way. So comparing today's investment, or say comparing today's expenses with future profit, that is actually termed as a capital budgeting. So that is, if I say what is capital budgeting, So the comparing today's investment with its upcoming future profit. So that is basically understand as a capital budgeting. Okay. So we can also say that it is something the prediction of the future's profit from today's investment or say expenses. That is actually understand as a capital busting. So there are different kinds of or say there are different methods for calculating the, like for comparing the today's investment from its future profit and just choosing the correct project for your company. So that is a basically purpose of the capital busting. Okay, so just understand with the example of this. Suppose that this is a person A, this is a person A, and this person A has a company. Okay, and this person's has a company that actually named as XYZ Limited. Suppose that. Okay, so this person name is A, and this person has a company that is named as XYZ Limited. And currently the person A have two business proposals where just person A have to just invest, and he just want to just if I say he just want to select any one project. So suppose that this person A has a two project. Okay, so suppose that this is a project A for this person A, this person A, this project A, or say this person has a project X or one, and another project that is project Y. Okay, so there are two basically project proposals, and the person A only have to choose one proposal for his company, and obviously the person A will choose that project that will be beneficial for his company. Okay, so suppose that in project A, the person A actually invested 100 rupees. For example, this person A just invested 100 rupees in a project A, while in project Y, he just same invested 100 rupees. So what I just say earlier, that is comparing today's investment with its futures or say with its prediction of the future profit, that is actually understand as a capital busting. So suppose that in the project X, if I say the person A or say the investor A that is going to receive 120 rupees in the future. In the future, suppose that from project X, the person A is going to receive 120 rupees, and from project Y, the person A is just going to receive 150 rupees, for example. Okay, so, if I say what or say which proposal just person A have to choose for his company, so that definitely you will choose that the person A should just accept the proposal of the project Y, because the benefit from this project Y, that is more than the benefit getting from the project X. Okay, so here actually two terms arrive, that is understand as the your cash inflow or say cash outflow, which is we just going to understand because this is very essential term to understand. Okay, this is a very essential term for your accounting, so we just understand what is cash flows, what is cash inflow, and what is cash outflow. Okay, so, this is basically a comparing today's investment. If I say what is the if I say for project X, what is the current today's investment or what is the today's expense? So you will say that is today's investment or say expenses, that is 100 rupees, and that is perfectly fine. Okay. And if I say what the future's profit or say what is the prediction of the future's profit from project X, so that would be a 20 rupees. So that will be a prediction of the future's profit, and that is from the X. And from project by, if I say what is the prediction of the future profit, that is actually the 50 rupees, that is the prediction of the future profit. So the capital busting is all about the correct project you have to choose for your company. So if I say person A that will choose for his company XYZ Limited, which project or say which project the person A should choose, so you will definitely say the person A should just choose the project Y for his XYZ company limited. So that is basically understand as a capital busting. And the different methods we are going to understand in this chapter. This chapter is a very interesting chapter. Very interesting chapter, and we in this chapter we are just going to understand what are the different methods, from what are the different methods we can just compare the today's investment, whether it's futures, or say whether it's a prediction of the futures profit. Okay, so just understand, and before to understand all the methods, just understand what is cash flow. Okay, so this term is very essential. This term is very important in terms of the accounting, because in accounting you will get this term in most of the chapters, like cash flow, where you have to understand what is cash inflow, what is cash outflow. So this is the term that you should just aware of this, and in the very detailed way you should just aware of that. So cash flow is basically just refers to the net amount of the cash. Okay, if I say what is cash flow is basically, because in most of the time you will get questions from based on this cash flow, where you will get the multiple choice questions, like in the point 5, where the in the theoretical form, like cash flow, what we understand by the cash flow. So the term that cash flow that actually refers to the net amount of the cash and cash equivalents. So this is a cash and this is a cash equivalents. So the net amount of the cash and cash equivalents just being transferred in and out of the company. So that is basically the cash flow. So if I say what is cash flow, just understand in a one line, that is net amount of the cash and cash equivalents and whatever just transferred in and out. So that is basically known as a cash flow. So from this actually two terms arrived that we have to understand. First is cash inflow and another one that is known as a cash outflow. Okay, I hope you all guys just aware of this cash inflow and cash outflow. So just understand what is cash inflow and what is cash outflow. So cash inflow, whenever the cash received or say cash equivalent received, so that is known as a cash inflow. So you only have to understand in a very simplest term what we understand by the cash inflow. So cash inflow is basically whatever you just received in a cash, that represent the cash inflow, and whatever the money, whatever the cash is spent from your company, that represents the cash outflow. That's it. So if I say whatever the cash, the company that was, whatever the cash and cash equivalent your company just going to receive, that is known as a cash inflow, and whatever the money is spent on that, or say whatever the money is spent from your company, so that is basically known as a outflow. So that is just represent as in your company's investment. That is basically also can understand as the expense of the companies. So that is investment or the expenses that actually understand as a outflow. And the inflow, that whatever we are just going to just understand that prediction of the futures profit, right? So whatever the profit we are just going to receive in the future from our today's investment or say today's expenses, that is basically known as a cash inflow. So cash inflow, that represents the company receiving the cash, or the money spent from your company, that represents the outflow. And these are the other terms that are most important from the exam point of view. Okay. So basically, if I say that a company's ability to create value for shareholders is fundamentally determined by its ability to generate positive cash flow. So if I say that is a company's ability to create value for shareholders, so that is basically, or say this is basically known as the ability to generate a positive cash flow. Okay, because if I say that what we understand by the, if I say if can cash flow be a negative, so the answer that it may be, because if our cash inflow is just lesser than our cash outflow, so our cash flow, or say the net amount of the cash and cash equivalent, that basically is just going to get a negative term. Okay, so cash flow basically can maybe just negative, okay, as well. So the cash received, that signifies the inflows, and the cash spent, that signifies the your cash outflow. Okay, one important thing to note here, that cash flow can be negative when just when our just cash outflow, that will be the more from our cash inflow. Okay, so that in that cases we can say that our cash flow will also be a negative. And the same type of the question you may get in the examination with a point 0.5, like our cash flow may be a negative in this sense. Okay, so the multiple just options are given here, like cash inflow and cash outflow. So you have to choose that if our cash outflow is more than our cash inflow, so in that case our cash flow would be a negative. So this is a very essential term that you have to understand. Like, look, cash outflow that will be greater than your cash inflows. So in that case, your cash flows will be negative. Okay. So now we are going to understand all this thing in a timeline, and that is very essential to understand. If I just make a timeline, suppose that you just invested 100 rupees from your company, okay, and say, let's say in any project, like in a project X, the you just investing 100 rupees, and this is actually understand as your investment, okay. And investment is nothing but your the cash outflow for your company. It is basically known as the your cash outflow for your company. So that is known as the your company's investment, that is basically 100 rupees. And from investing this 100 rupees, if you are just getting suppose that after 3 years, suppose that after 3 years, if I'm just making the timeline for this. So if I have to just represent this investment, okay, and this by this example we are just also going to understand one method of your capital busting, that is net present value method. And that method we will discuss in the next lecture, okay, because we have a sufficient time for everything, and we are just going to understand everything in a very, very detailed way. So in this lecture we are just understanding what is the basically the cash flows. And because this cash flow understanding this cash flow is very important for your accounting understanding, okay. So if I say from project A, if you're just investing 100 rupees, so how you just represent this 100 rupees in the on the timeline. So you will just represent this 100 rupees with a minus 100, right? Because this is actually represent your company's outflow, or say the company's expenses. And suppose that from project A, after 3 years, or say in every year, you are just going to receive 50 rupees in a 1 year, or say 50 rupees in the second year, or say 50 rupees in the third year. So if I say that represent a 0, that represent a 1, that represent a 2, that represent a 3. So if I'm talking about for after 3 years, or say after for the 3 years, if I have to just what say that what is the company's cash inflows, or say the company's cash inflow and the company cash outflow. So this 100 rupees is basically known as a company's cash outflow. And this 50 rupees, whatever you just receive, whatever the you are just going to receive in the first year, in the second year, in the third year, okay, so that actually represent your cash inflow, and that you actually have to understand in a very fine way. I hope that is. And that 100 rupees is represent as the cash outflow, okay. So like I say that from project A you just invested 100 rupees, and from project X you are just going to get 150 rupees. So in this case your cash flows is basically the positive, okay, because in this cash outflow is greater than your cash inflow is greater than your cash outflow. So that's why in this case the cash flows is a positive, okay. So like in the third year, like in the first year you are just going to get 50 rupees, in the second year you are just going to get 50 rupees, and in the third year you are just going to get 50 rupees. So that is basically known as your cash inflows, okay. So this is a basically comparing the today's investment with the its futures profit, or say with its prediction of the future profit. So that is the basically definition of the capital investing. I hope it is now clear for everyone. And now the different methods for your campaigning the capital busting, and all the methods are very important. All the methods are very important from exam point of view, because from whatever the methods I'm just going to discuss with you guys, Like the first method for compare for just calculating the capital busting, or say for comparing the your investment with your outflows, or say comparing the your outflows with the inflows, that is known as a capital busting. So there are different methods for calculating this. The very first method, that is known as a NPV, or say net present value method. Okay. Second method, if I say the another method that is important for your example too, that is IRR method, which is also known as the internal rate of return method. Another method that is important from example two, that is known as a payback method. And all the methods we will discuss in this week. And this chapter is very important, so I hope the all things you just going to understand. So NPV method, IRR method, payback method, all method is just about your cash inflows and cash outflow. Okay, so net present value, as the name itself just representing, that is net present value, and this net present value we are just going to discuss in the next lecture. But the one thing that we have to understand, like I always just explained you only have to understand the first formula, that is present value and the future value, or say relationship between the present value and future value. What I just explained you, that is present value, just tell me that is present value that is equal to the future value, and it is divided by the 1 plus r to the power n. Okay, so the same way, if I say what is the cash inflow, or say what is the cash outflow, so this future value also you can just understand in the cash outflow term. Okay, and this r represent your discount rate. This is very important thing to understand. If I say what is discount rate, so this R represent the discount rate, and N represents your time. Okay, and this N represents your time. Now, the very important thing we are here to understand, what is the discount factor and what is a discount rate. Because in this capital busting chapter, discount factor and discount rate, because in this capital budgeting chapter, you are just going to get the questions like the discount factors are given, and where you can just confuse between the what is a discount factor and what is a discount rate. So I'm just going to clear this concept, like a discount factor is basically your this value, like 1 divided by 1 plus r to the power n, and this is a relationship between the discount factor and the discount rate. I hope it is now clear for everyone, because in the multiple questions you are just going to get the discount factor is actually given in the question itself, and this discount factor is nothing but this value 1 divided by 1 plus r to the power n. So if I say in this term, that is present value is basically the future value, and it would be multiplied by your discount factor. So I think you should just all memorize this fact, like this formula. So what we understand by the discount factor and what is we understand by the discount rate, and both are different, and both are relates with this formula, that is 1 divided by 1 plus r to the power n. I hope it is now clear for everyone. Okay, so if in the question, like we are just going to solve the questions on tomorrow's session, and we are just going to understand what is net present value method, and after that internal rate of return method and payback method we are just going to understand. So that's all for this session. In this session we understand what is capital busting, what is the purposes of the capital busting, and the different methods, about the different methods, like net present value, internal rate of return method and payback method. Each and every method we will discuss in very detailed way, and for NPV method, for IRR method, for payback method, we are just going to solve multiple questions. Okay, so in the session, the very essential thing you just understand, like cash inflow, cash outflow, discount factor, discount rate, and that all are very important. Okay, one more time, I would like to just say that you should all just enroll in this foundation batch, and with the code Y422 you can avail this golden opportunity at very convenient price. So I think you should all just enroll in this batches. Okay, so with the code that is Y422 you can avail a maximum discount on every JAIIB and CAIIB product. Okay, So thanks for watching me here. Thanks for joining me here. Like this video if you're liking our efforts, liking our content, and share this video to your friends so that maximum number of our colleagues can join with us. And subscribe to Officers Adda 247 YouTube channel so that you can get the regular updates that related to your examination, as well as the recent lectures